Welcome everyone to the Brandon Adams Podcast, episode 2. I have one of my favorite people, Jason Strasser. I was once encouraged to do a podcast where I would find poker players that transitioned to something else and did it very well. I never took up that idea, but we've sort of stumbled on it by accident because Jason, I really can't think of anyone who's managed that transition better than you have. Talk to me about the way that poker helped you. I mean, there's the obvious things like thinking about expected value, thinking about risk control, but what beyond the obvious, in what ways beyond the obvious did poker help you?
It was for sure losing money. When I showed up at Morgan Stanley my first day, there were all these, kids that went to fancy schools and whatever, great grades. But I saw them going through things that I had gone through when I was, 17, when they were starting their job, which is you have a trade that loses money, and handling the ups and downs of that becomes sort of second nature for a poker player. It is not normal. It's like normal humans are not used to that kind of thing. So for sure, it was being able to sort of rationalize, like I have a strategy. I'm trying to improve my strategy over time. And is that me or is that you? Okay.
That was me.
Okay. So improve my strategy over time, and I've had experience losing money. Like the downswings in poker were by far the most valuable thing I had when I started my career. Everyone else thinks it's math, statistics, or looking for expected value. You can really teach that a lot easier than you can teach handling a big downswing. And trading, just like everything, you have to handle those downswings, those bad trades, those bad moments. And so that was by far the thing I took the most with me.
Yeah, one thing that's really helped me from poker is an appreciation of what a hyper-competitive environment looks like.
Yeah.
And I don't think people understand exactly how hyper-competitive poker is. Like, people now love to say, okay, in 2006, it was so easy. It wasn't easy. It was fucking hard. It's always been hard. It just goes from being really hard to being harder still. And markets are a lot the same way. So I think for me, poker gave me an appreciation of what a hyper-competitive market looks like and how a hyper-competitive market evolves over time, and just how difficult it is to get an edge, how much energy it takes, how much thinking it takes. I imagine that experience was similar for you.
Yeah, for sure. Absolutely. And if you think about, poker and Wall Street, the stakes are like so much bigger on Wall Street. And so the amount of people, I think the amount of energy the world expends on these types of things is proportional to how much money there's available if you succeed at them. So I think 2006, the big difference was there was just a lot more money out there to be made. There was just more money to win than there is now. I agree with you. It was hard in 2006, but there was a lot more money out there to be earned, just people just giving it away and more casual players in the game. But yeah, Wall Street for sure. It's hyper competitive. What I do every day for a living, it's a zero-sum game. There's every time I buy something, there's someone selling it. And the other side's a professional 99% of the time. And so I think for me, I realize now that like a lot of people, when they think about what makes them happy every day or what they want to do, I think you're better off sticking to things that you're good at versus things that you love, if that makes any sense. For me, being at the top of poker, I wasn't not the top of poker, but being like competitive at poker, I love that sort of place where you're pushing the theory and you're not reading books. You're not necessarily looking for a bunch of material and soaking it in. You're the one pushing the theory. You're experimenting, and then you see other people start to copy you. I really love that. And what I do now for a living is very similar to that. We're competing in a game. You can call it a game. You can call it whatever you want. And everyone has a strategy, and everyone's trying to improve that strategy. And you're playing for lots of money. And I imagine people that do DFS at a high level, it's the same thing. And people that do any kind of game or sort of zero-sum game for a living, it's that iterative pattern. And I love that process. And I couldn't imagine doing something that didn't involve that.
So now you're an options maestro. And in 2006, you were an A poker player. What was your grade as an options trader in your first year?
Really bad.
What was your grade relative to now? What was your grade relative to the first year?
I wouldn't even give myself a grade back when I started. So I started in 2007. I think it's like learning a language. When you start trading options, you aren't even an options trader. I tell the young kids that we hire, I'm like, 9 months. Just don't get frustrated for 9 months, because it's like learning a new language. It takes a lot of time. So I would give myself like an incomplete when I first started, because AI didn't. There's so many more variables. You think about a deck of cards and you run out some boards. There's a very finite set of outcomes for that. You play DFS. There's a finite set of outcomes for the players that you're playing. There's nothing crazy. I remember one time, and you can pick any day in the market. There's something happening that you didn't even like expect. It's the equivalent of somebody walking up to the poker table and just ripping up your card in the middle of the hand. There's just like these unknown. It's such a wide range of outcomes in markets compared to games. So I think for that reason alone, just because there's so many companies, there's so many different things going on, you really can't even judge yourself as a trader until you get into it. And I would say, like, looking back, like 4 or 5 years into my career, when I was 2011, I still think, compared to, looking back, it's the same way you look back at old poker hands. I don't know if you ever do that, but if you look back at when I used to play a lot of poker, I'd look back at a hand a year ago and I'd be like, man, I could do that a lot better. That was pretty bad. It's the same thing now. Like, I look back at trades I did even 2 or 3 years ago, and I'm like, I wouldn't have done that today. So I think hard to give myself a grade, but I think me versus the competition, it just sort of got better over time. Like, me versus my peers got better over time, but I was pretty bad when I started.
So 2008, banks are losing a lot of money. Probably some of the people that you started with at Morgan Stanley were moving back in with their parents. What was the environment on Wall Street like in 2008? What was your personal experience?
It's really good not to make any money when you're in that environment. I was the kid making no money. So it was actually a very unique situation, because as when Wall Street firms are trimming down, or they're cutting costs and they're laying off people, they typically are doing it in the middle. They're keeping the young people that are competent and that don't make any money. And then they're going to keep the senior people that are really the difference makers at the firm. And then they look in the middle for people that are maybe a little overpaid. Maybe a kid could step up and take their job one day or whatever. That's where they do a lot of the cutting. So from a personal job security level at the firm, I was totally secure. And I was so grateful that I got to see that, because seeing 2008 from an options trading perspective is something you'll never forget. If you went through that, even though I was only 1 year in my career, you'll never forget it. So I'm grateful. But at the same time, I thought the firm was going under. That was that. So, you can see, using the credit default swap market, you can see basically a live betting market on the odds your firm is around at all. And, as times get worse in 2008, I was looking at Morgan Stanley's CDS, and it was saying at one point, 70% chance of going under, 80% chance of going under. So, I'm a math, whatever. We're all reasonable people here. I remember calling my parents and being like, I gave this a shot. I'm going to go back to poker. I don't know what to do. This might just all be over. And I remember the senior people at Morgan Stanley all coming to the floor and huddling us up and saying, everything is going to be okay. Like, everything will be great. Don't worry. And then every day you'd come to work and there'd be people unwinding trades where they owed Morgan Stanley owed them money, and they'd come in every day and be like, where's that money? Where's that money? Where's that money? Where's that money? So you see those, you're the trader, trading these things. So I'm like, okay, that's not a good sign. And then, Morgan Stanley ended up getting bailed out by a Japanese firm. Japanese bank put in the money that they needed, and they wrote out the rest of it. Obviously, they got some help from the government as well, but Morgan Stanley survived. But later on, the CEO of Morgan Stanley at the time wrote a book, and he said, the same guy who's on the floor saying everything's going to be okay, he told his wife it was over. So I found it to be a really interesting time. I look back on that time, like, I'm very, very grateful. And I think people who traded through that time are different. Like, I see a lot of people that have started their trading career 2010, 2014. And I truly believe you need to see something like that at some point in your life, and it will change how you risk manage and approach things.
It taught you also like how bad things can get. It taught you to be cautious. One thing I've noticed in a long history of poker and markets is that poker players by temperament tend to be a bit pessimistic. Like I don't think it was entirely coincidental that that poker players latched on to Bitcoin and altcoins because they're just sympathetic to the arguments that the monetary system is going to collapse, that everyone's fucking them, that we're going to eventually go to Mad Max world where you need to have your money in your hip pocket or whatever. So in markets, in real life, I know guys that are just optimistic and it just really works for them. Like I know guys that just they saw the iPhone come out in 2007 and they're like, you know what, this is going to be the change of the world. I'm going to buy Apple stock with like 50% of my money and just hold it. And they did that and they just never sold. And like those stories happen, but not to poker players. Poker players are pessimistic by nature and they tend to thrive more in that 2008 type environment. I've noticed you see very few poker players that are optimistic by nature, and we've spent enough time chatting about markets that I know that you have a tiny bit of a pessimism tinge. Is that accurate?
I'm not like one of these people that lives life just like rooting for the market to tank every day. But yeah, there's certainly, especially today, there's certainly like plenty of, you don't even need to look very far to be pessimistic about markets. And I like to think like my view changes over time, but what I do every day, I am not worried about that. I'm not betting on the market going up, or betting on the market going down. I'm focusing on my game that I'm playing. And so I think I do have my views on markets, but we're in the middle of this ridiculous long bull market. And if you were really truly awfully pessimistic at any point, at this point, you're probably out of business or carried out. All those hedge fund managers, if you look at them that hated markets or whatever, at some point in the last 10 years, it's been ugly for them. So I do have my views on markets, but when I come to work, I don't bring them with me, if that makes any sense. I'm playing my game. I'm buying things I think are too cheap. I'm selling things that I think are too expensive. Same way you approach a poker hand, where can I find value? And so, yeah, I think you're right about poker players being pessimistic. I don't know necessarily Bitcoin. I think poker players are actually using Bitcoin. I think poker players were early adopters. Poker players are very sympathetic to sending money around the world and the challenges that has. So I think part of it is pessimism. I think also partially is like poker players were actually using Bitcoin for real reasons. So Bitcoin made a lot of sense. And Bitcoin's one of my big regrets in life that I'm not like super duper rich from that.
I wasn't a participant either. You had some big early days at Morgan Stanley. You mentioned one day where you made $35 million
one time
for the firm. Another day where you made $12 million. What do those days feel like? What happened?
The first one was a really funny story. So it kind of gives you a story of how banks work and how the game at a bank works. So I started off at Morgan Stanley in 2007. When you start off as a junior trader, you don't have your own book. You're learning options. You're getting coffee. You're making spreadsheets. You're doing the small trades, but there's no book waiting for you. It's not like a normal career where you say, okay, I do this, I move up the ladder. You start as a junior consultant, then you move up, whatever. It's not like that. There's no book waiting for you. But 2008, a few people left, and there was a book waiting for me. And my first book was a materials book. So think about like mining companies and whatever. I was doing a lot of agriculture at the time as well. And then later on, there was an industrials book that opened up. And the industrials book, nobody wanted. And the reason nobody wanted to trade the industrials book is that one day when the industrial traders was not in the office, a customer came into Morgan Stanley and did a gigantic trade. And it was in Burlington, Northern Illinois, which is a railroad company. If you ever seen a railroad go by, it's like 50% to be this company. And that was when that idea really, really cultivated, because I kind of got out of the trading world where you're trading and sort of you're going from one trade to the next trade to the next trade to the next trade into a much slower environment where I had a lot more time to do research. And that's where the idea really kept festering. And I went to my boss and I said, hey, we've done a few of these little trades. Look how much potential this has. I'd love to run this strategy like separated from the rest of this fund. And he didn't like that idea. And so I was 27, quit my job, and decided to start a commingled investment fund. And so I think, it was crazy. But the whole time, the idea behind Caption ultimately came from being on the wrong side of it, learning from getting killed, losing money on the other side of these trades. And that's kind of how we started.
Well, the wrong side in the option market context could refer to inside information, being on the wrong side of inside information. It could also refer to just someone else being more knowledgeable about the moments of the distribution, like the skewness looking different than you think or something like that. So what type of adverse selection was it?
For sure, I never would start a fund saying, I'm going to do it because of...
No, I know. But as a market maker, maybe you were victim to inside information.
Let's just be very clear. When people cheat in the markets, a lot of times they're using options. If you know something you're not supposed to know, and I want to tell everyone out there, never do this. It's just not worth the upside. It's just not, no matter how much money you make, it's just not worth the risk that you ruins your life. But a lot of people are tempted. They hear about a deal. I've heard things at poker games, and of course we go through, whenever you hear something like that and you work at a place, you go through the right steps to make sure you're never going to be breaking any rules. But people usually use options to cheat. And if you look at a lot of sort of takeouts, let's say company A is buying company B, and you look at company A's options activity before that event, a lot of times you'll see very suspicious looking trades. It's really the venue for people to cheat. So yeah, of course, I was on the other side of a lot of that. A lot of the clients that I had at Morgan Stanley at some point or another, a decent amount of them ended up getting in trouble. If you look back at insider trading, there was a lot more that used to happen than there does today. And a lot of those people got caught. I'm not talking about that at all. What I was talking about, what we do is more research-driven stuff. So we do a lot of homework about the distributions, and we look for spots where the distributions don't line up with what we think. And that's I think, just backing up for people that aren't familiar with options, an option, when you price an option, there's all these variables that go into a formula. Most people are using a Black-Scholes model, but you can use lots of different ones. There's all these variables that go into the model, but there's one variable that's the big unknown, which is future volatility. And so what option traders are ultimately doing is spending a lot of time focused on that one thing, which is how volatile will this be in the future? And the really good option traders have a very good feeling for when the market might not be right about future volatility. It could be for lots of different reasons. A lot of people think, the best options traders are the ones that are, they know Apple's going to go up and then they can make the most money with that idea using options or whatever. I think the best options traders are the ones that are very good at knowing upcoming events and very good at knowing when options volatility assumptions are not correct.
So I know you can't talk much about trades or returns, but maybe you're able to give the example of the Trump election to talk about.
I can't give specific trade stuff. I mean, but okay. just in general, the 2016 election was a really good, was a really impactful moment for certain companies. Obviously, the markets were very interesting. If you remember when Trump won, the markets were way down, futures were way down, and that famous story of Carl Icahn leaving the presidential rally to go buy futures. And then of course we had a gigantic rally in equities. But yeah, like it's a good example. Like when you're thinking about the presidential election from like an options research perspective, you're thinking about which industries or sectors are most impacted by what might happen in the election. And just to give you some examples, if you read the paper today, you'll read about health insurance companies. They're in focus right now because there's just an idea that Elizabeth Warren wins, it's going to be very, very bad for health insurance companies. If we ever get towards sort of a Medicare for all situation, it could be very bad for insurance companies. On the flip side, people think if Donald Trump wins, there's nothing going to change with healthcare, which is a pretty obvious read right now. And so that's an example of a stock that has a lot riding on the election. In 2016, there were a bunch of industries and different stocks we identified that had a lot riding on the election. And I think elections are great events, and they're something that anyone trading options or anyone in markets should be paying attention to because they can really lead to big shifts in how stocks are priced.
So in terms of the founding of Caption Partners, take us through two processes. one, the natural place for you to be is New York City. Your friends are in New York City. Your career was in New York City. You started the company in Oklahoma City. So talk through that. Also talk through the logistics of starting an investment fund.
So we actually started in New York. So we got together I had two partners. One of them was actually, he only was with us for a year, but Chris Fargas, he had a poker background. He's involved in DFS community as well. I think he works at DraftKings now. So Chris, myself, and my other partner, Will, we started, and we thought we would raise, call it $20 million when we launched. And anyone that knows hedge funds, even $20 million is just absolutely nothing for hedge funds. But we started off with $2.7 million, which is not a lot of money. And I still to this day, I know every single person that put money into that first 2.7 million, because on paper, we had never run a hedge fund. The fund was based off of an idea that we had. We had no returns. We had no nothing. If you think about going to raise money for any product, whether it's a startup or a fund, usually you need to come with something. Maybe not a startup these days, but for sure a fund. And we on paper, it was not where it needed to be, certainly for an institutional investor to invest. But we took the approach with our fund the same way you take an approach with a startup, which is you raise a little bit of money and you sort of prove out an idea. And that's what we did. When you're a startup, you get a little bit of money, you build a beta version of your website, you go get some traction, and then you go back to investors and get more money. We took the same approach with hedge fund. Let's prove out an idea. Let's get some data. Even though it's tiny, tiny trades, because we're only running 2.7 million, let's get some data behind it. Let's show people that this idea actually works. And we did that. And then over time grew it every year. And Oklahoma City was kind of a crazy story. So I went to Duke. We had a Duke connection with a guy by the name of Aubrey McClendon. He was a well-known oil and gas guy. He started Chesapeake Energy. He's one of the first guys to really pioneer horizontal drilling, which is when you drill down and then you drill L and you can frack and all. If you think about the energy revolution in our country, a lot of the beginnings of that started with this guy. And he was a very eccentric guy. He owned part of the Thunder. He was very big in Oklahoma City. And I had tried to reach out to him because I knew him from Duke when I launched the fund, but the timing didn't really work out. And I tried again a couple years after we launched, and he was like, "Hey, yeah, I'll put in some money, but also you should open up an office in Oklahoma City, and I'll help you raise money here." And he had just raised $10 billion for his new venture. So I'm thinking, okay, well, if he just raised $10 billion, maybe, whatever, maybe he's obviously good at raising money. So I came to Oklahoma City. We kept an office in New York. So right now, Caption has an office in New York and Oklahoma City. And so long story short, loved leaving New York. I don't know if anyone else out there feels the same way, but for me, I got into an environment that was much better for me to succeed at work because all the distractions were gone. My commute to and from work was very simple. Cost of business and cost of life went way down. That's the story the story got even crazier because 2 years after Aubrey did that deal with us, he died in a car accident. So, and if you just go back, if you go back from starting Caption to today, like the amount of ups and downs you have when you start something like this, not just money, just life, it's incredible because you start Caption, you're living off savings. When you're living off savings, no matter how much savings you have, it's not a very good place to be. So that's where we started. Then I moved to Oklahoma City. I didn't have a driver's license, for example. My analyst used to have to come to my house every day and sit in the passenger seat while I drove to work because I had a learner's permit and not an actual, just painting what my life looked like at the time. I was also a single Jewish guy in Oklahoma City, which is also like not exactly where you needed to be, but found my wife, super happy. Shout out to Amber. I think the Oklahoma City story is great. We're the only hedge fund in Oklahoma City. There was another one that
really? Is that possible?
As far as we know, there was another guy who bought and sold cows. We called it Cow Arb. And I actually went to the cattle auction with him one time and checked out what he was doing. But yeah, there's really nothing. So it's kind of cool. Like the thing about a business is like when you hire employees in New York City and it's very competitive for talent, the employees are less sticky. When you and what that ends up doing is, I'm not complaining about having to pay people in New York, but what it happens to do is when you take young people and you train them and you put a ton of time into training them, you're more at risk of losing them in a New York market. In Oklahoma City, we hired a lot of young people. We train them, but we feel more confident training young people because they're more likely to be sticky in a market like Oklahoma City, where there's no other hedge fund in town, and we're paying them better than you're going to get paid anywhere else in town. And so I love living here. I love working here. I just got my Thunder season tickets, which is going to be interesting because I literally got them and then they traded the whole team away. So, but I'm really excited, and I think I always tell people who have only lived in big cities their whole life, you should really try some. You'll have a lot of fun leaving. So I usually tell them, yeah.
Well, I enjoyed my brief visit in Oklahoma City.
Cool. Yeah, I remember that.
I enjoyed my stop in. Okay, so now you've grown to the point where you're close to 10% of option volume on.
No, 1%.
1%.
I apologize. Yeah.
Okay.
Approximately.
Which is still it's a huge amount of activity, and it's a combination of, again, I don't want to talk too much about trading, but a combination of market making and speculative positions.
Speculative always implies the wrong things. I don't know what's speculative and what's not speculative, but yeah, we combine research and we combine market making.
I'm sure individuals have talked with you about their option strategies and their options portfolios. And I'm sure there's some interesting voices going on in your head when you hear those discussions. What is your advice to the casual observer who's dabbling in options?
Yeah, you probably shouldn't be doing it. I think, yeah, I mean, it's incredible that investing and trading is one of those things where people who are not doing it full time think they're very good at it. There's not that many casual part-time poker players that think they're the best in the world or amazing at it. But there are a lot of people that sort of trade a little bit or invest in their own account a little bit and don't dedicate their whole life to it, that think they're amazing at it. And yeah, options are addictive. Everyone who's traded options has had that feeling where they bought an option for X and it went to 10X or whatever. It's a very great feeling when that goes well. And I think that only supports people to keep trading options. And a lot of why people are trading options is because they either have a view on where a stock is going. So they think, okay, Apple's going up, I'm going to buy call options or whatever. A lot of it is technical analysis stuff, which I have my own views on, but largely speaking, there's a lot of technical analysis is not really much of a science in my opinion. It's more of, when you do a science, you say, okay, if you're doing physics and the ball's rolling down the hill, you can explain exactly how to calculate momentum and why and everything. When technical analysis happens, it says, okay, if you see this pattern, it means that, and there's no explanation for why. And so there's a whole lot of people, especially on Twitter, that are trading on technicals. Or I'm not saying you can't make money doing that, but I really think that most people should not trade options. What I always tell people is, if you are not a financial person, you really want to just cut the vig down when you invest. You want to stick to low cost mutual funds or low cost index funds, and you want to cut the vig down. And I don't think that's the best way to invest for a sophisticated investor, but for most people out there, that's by far the best option. And it's okay to dabble in options the way I dabble in DFS. I know I'm going to lose. I have fun doing it. It's a good sweat. Okay, fine. If that's what it is for you, that's great. If it's a utility function to it, that's great. But it's really, really hard to make a living at it. And just rough numbers, the option market making people out there are making $1 to $2 billion a year very consistently off retail flow. And they take the other side of, there's only a very few number of people that are taking the other side of these retail trades. And those funds are consistently make $1 to $2 billion a year from retail. So if you think about it, the other side of these trades, it's just like a money printing factory.
Yeah, and it's a zero sum game versus what has historically been positive sum in the market as a whole.
Yeah, that's the other thing people don't realize. Exactly right. It's a zero sum game, and markets, even if you throw darts at the paper and you're a monkey and throw darts at the paper, you pick stocks that way, stocks have a positive expected value to them. They typically are generating cash or, whatever. Obviously you can pick some stocks today that don't fit that requirement, but most stocks have, in my opinion, a positive expected value. So that's the thing is you can be very mediocre at buying stocks and make money. But if you're mediocre at options, you're going to lose. And it's just don't do it. That's my advice.
So bringing the poker connection back into it, I think it's not entirely coincidental that you went from poker to options trading as opposed to, say, poker and distressed debt investing, where you're spending all your time reading through court documents or something like that. I think there's an adrenaline fueled personality that goes into poker. There's an adrenaline fueled personality that goes into options. So what is it about options that really like gets you going? And I also want you to sidebar into another topic, which is, although you left poker basically 100%, your friend set, it seems to me, stayed pretty heavily. I mean, the biggest gamblers and poker players of your generation, you've stayed pretty close with them. So yeah. You are very much in touch with the poker world and the poker personality. The poker personality tends to be intelligent, ADD, but capable of hyper focus, which probably is a lot of trading as well. How do you gear up your attention span and your focus when you're doing the day-to-day trading? So it's a lot, but there you go.
Options are super fascinating because so let's just make a very simple example. Let's just say, Brandon, you have a house that's worth $1 million. I'm just making up a number. And I say, okay, Brandon, I got a sheet of paper and it says I can buy your house for $2 million anytime in the next 20 years if I want to. Now that sheet of paper has value. The question is, how much value does that paper have, right? So the first thing you do if you want to say, what is that piece of paper worth, is you'd have to dig into the real estate market. So a real estate market like Miami, historically more volatile than other real estate markets. That piece of paper in Miami has a lot more value than Oklahoma City, for example, where real estate prices have been much more boring. But that's only the first level of what an option is. So, okay, you can price it on day one. What makes options really, really fascinating is that as time passes and as things move around, your risks are always changing. So you don't have the same position. Let's just say I buy that contract from you and I say I have the right to buy your house. If 3 years pass and prices go up 30%, I have a different position. So like every day I come to work and my whole portfolio is very organic and it's changing. And that's what makes options really exciting, is that you buy one share of stock, you come back in a week, you have one share of stock. But options aren't like that. And it takes a certain personality. ADD is a very good thing. It's a very sort of accurate way of looking at it. You have to sort of keep an eye on what's going on very, very, very closely, because things are always changing. And when options expire, there's a lot of action that happens. And so I think just the whole understanding how options work and understanding how things change over time is super fascinating. I also think options are fascinating because people trade them for all different reasons. When someone buys a stock, they think it's going up. When someone sells a stock, they think it's going down. Options, there's different stuff going on. You have some people that sell options to try to get some extra yield. So they might buy a stock and sell it, give away some upside in exchange for a fixed payment. You have people that are hedging. You have people that are just straight up punting and gambling. You have all sorts of different types of customers that trade options. You have asset managers, you have retail, you have professionals, you have different groups of people. And so I think options are fascinating because you have all these people coming together, trading these things, all looking at them in different ways. And then you also have the process of managing a portfolio is very interesting. It's not very static, it's very dynamic. And that's why I love options. So the second part you said on the personality, it was like the personality. Yeah. You're right. I think, again, it comes back down to, I have a very strong belief that people who do what they're good at are going to find more happiness than people who do what they love. That kind of sounds dark, but that's what I believe. And if you're a poker player and you look at distressed debt investing, for example, you're not really playing to your strengths. When I went to go interview for jobs, traditional investment banking jobs, they didn't talk to me. Consulting jobs, they didn't talk to me. I had a B minus grades in school. Like there was nothing on paper that had me stand out except poker. But of course, a lot of the trading people were like, I want to talk to this guy. He's had success in poker. And so I think like the skill sets that go into trading don't go into other things. And I have a very hard time believing I'd be any good at those things. So yeah, and we have at my firm, we have a culture of bringing on people with sort of poker backgrounds as well, because whether they're poker players or just kind of think like poker players, I always found, and you asked me about my friend group, I always found it really natural to be friends with people that kind of approach things the same way. And even though I went off and did something completely different than poker players, I always stay in touch with my poker friends because I feel like we always speak the same language. And in the normal world, there's a big difference between a random person and a poker person. And I just love being around poker people. And then of course, like we always, like, I always like getting involved in staking poker players and getting involved in action like that, and vice versa on my stuff. So I also think it's a symbiotic relationship. I think a lot of poker players want to have someone they can call and be like, hey, I saw this in the market. What am I thinking? So I have a lot of friendships that I think are of course based off of friendships, but they're sort of symbiotic relationship, because the poker players I'm talking about, they also want to feel like they have a connection to the real world. Maybe they're playing in games with businessmen or whatever. They want to feel like they can have questions answered about markets, about whatever. And so I'm a resource for a lot of them.
Okay. Related to this topic of poker players calling you about their options positions, there's always things you can and can't talk about, but I can of course talk about my own stories.
Yeah.
And you, I feel like you have similar stories that you may or may not be able to share. So, I'm pretty savvy about markets, as you know, and, every once in a while, I'll make a painful mistake that will teach me something. And I had potash on my not potash. I'm sorry. What was the popular pot stock of the day?
Tilray.
Tilray. So I had Tilray on my screens, and I was watching Tilray, and I was resisting getting involved from 40 to 100. I kept resisting getting involved. And then finally there came a point where I was going to just take a small punt. So I was looking at the different ways to play it. And the short story was that I wrote 10 call contracts, which is 1,000 shares as for our viewers. So I'm giving someone the right to buy Tilray at 170, and I'm collecting a healthy premium to be able to do that. Well, as you know, this is probably the best example of a short squeeze in the past 3 years. There was a short squeeze on Tilray that seemed to be closely related to the option markets, and I remember someone called me because Tilray was going up, and we had been talking about it, and I was driving over a bridge, and it took 4 minutes to drive over the bridge. And in the 4 minutes, Tilray went from basically 190 to 290 in the 3 minutes. And I ended up, I don't know, covering at not a good time. But I recall that other poker players who may or may not have spoken to you had a similar situation, and we came upon it not by talking with each other, but I believe we all came upon it independently, and we all did this terrible thing at exactly the same time independently.
Yeah, that for sure. I can confirm that. There are spots like that look ridiculous, where you see Tilray trading, I don't know, what was it, $10 billion valuation? I don't remember the exact numbers, but you see something that makes no sense, right? You look at its business, you look at its fundamentals, there's no way. And you can look at companies today, a lot of people talk about like Beyond Meat that's been on if you look at the valuation of Beyond Meat, or whatever, there's just a ton of these things. I always caution people to be really careful of the situations where the public float is very low. What that really means, for example, let's just say a company has 100 shares outstanding, but 90 of them are owned by insiders who can't sell them. They have to hold them. What that ends up happening is the actual amount of shares that are available for the public is very low. Only 10 shares are available. And if people are trying to short those shares, it's very, very complicated to short them. And in the case of Tilray, I'm guessing you tried to even short the stock. You probably weren't even able to. I'm guessing your broker wouldn't even have let you done that at the time. So the only option was buying puts, which were crazy expensive, or selling calls. But I always caution people to really be careful with those kind of things, because it's not about will Tilray come down? And we can all see Tilray has come down from that 290 or whatever it was, come way down. It's about the path it takes there, and it's about the timing of it, which is the tricky part. And those stocks like Tilray that have no shares available for borrow in the options markets are vol is very high, and there's a ton of crazy stuff going on in the options market. You should just stay away from that, just in general. Even a lot of professionals stay away from that, like, because it's not about what is this company worth. Everyone knows it's overvalued. It's just the supply and demand. There's like a few people on Robinhood or whatever buying the stock, these, pot stock, whatever, buying them. And there's just no one to sell it. And so it goes crazy. And so I always tell people to don't get involved in options, especially don't get involved in spots like this, because you might be right that the stock is overvalued, but it's just executing on that is much more to do with timing than it has to do with the ultimate goal. Even if you're able to short the stock, the broker might have charged you $2 a day to short that stock or whatever. And then maybe it goes down, but maybe you've paid more in borrow costs than you made on the short. So I always tell people to be very careful, especially retail clients, because the brokers can really take advantage of different retail clients in that spot.
So not to get too deep in the weeds and lose a lot of viewers, but you mentioned just a couple minutes ago that option expiration tends to be an interesting time, an active time.
Yeah.
And as you know, I come at things from the academic perspective, and option expiration is one example where the theory and practice of derivative markets are very different, because in theory, there's nothing special about expiration. And just in the same way that I don't think it was coincidental that, say, I was long or short some calls and other people were short calls, and you had this short squeeze. I think possibly the mechanics of the option market were driving the activity of the stock market. And in expiration, there's a tendency for what's going on in the option market to drive the stock price, which is not something that theory considers. Explain what that looks like on an expiration day, on a very busy expiration day.
It really has to do with positioning. So if you think about, let's just say, for example, one person sold options, and that person that sold options is just not going to pay attention whether that option finishes in the money or out of the money. Let's just say maybe it's not going to affect their trading between now and expiration. Let's just say, like, for example, you own shares of a stock and you sell calls against it. Whether the calls go in the money or they don't, you're not going to change the way you trade on expiry. So you've done your options trade, and then that's it. So one side of the trade is not involved in the market or not involved in trading expiry, blah, blah, blah. They're just they've done their trade and they're done. And the other side of it are professionals that are in the market, managing their risk, trading their position. So as you approach expiry, let's just say an option's at the money, you might manage that position as if it's 50% to be in the money or 50% to be out of the money. And you might hedge yourself accordingly. On expiration, it's binary. It's either in the money or it's out of the money. And so what ends up happening is the professionals, if there's professionals on both sides, then a lot of the activity gets canceled out, because while one person is selling, one person is buying. While one person is buying, one person is selling. Where you really get the extreme, either they're called pins, which is when they stick to a certain price and they don't move, or you get the opposite of a pin, a short pin, when you get a lot of volatility. You get one of those two outcomes when all the professional or the people that are actively trading are on one side, and there's someone on the other side not doing anything. And in the case of where all the professionals or market makers are long options, then when the stock goes up, they're going to sell. And when it goes down, they're going to buy. Because when the option goes out of the money, or let's say it's a call option, when it goes out of the money, they're long call short stock. They have to get rid of the short stock. When it goes above, they have to short more stock. And so that creates what's called pinning. And so if you ever see a stock on expiry that's like near a round, nice, easy number, where there's a bunch of option open interest and it's not moving and it's stuck there, that's because there's a lot of professionals that are trying to sell it and buy it the minute it goes the other way. Now, if it's short, it's the exact opposite effect. So the minute it goes above the strike, now all the professionals need to buy, not sell. And that's when you can get kind of violent moves on expiry. And so again, it's a little bit more nuanced than what you read. And I think that's one of the takeaways with options, is that unlike poker, where you can get a run at one subscription or whatever, and you're not going to be the best player in the world, but you're going to get a lot of really good material for not much money. In options, there's just nothing, and in a lot of stuff in trading, there's just not good stuff on the internet, in my opinion. And that's an example of one of those things I've seen explained on the internet, but I don't think that people really get it. Like, you really only get that activity when you have someone on one side of the trade that's not doing anything. Because if you had professionals on both sides, it would just cancel out the effect.
You say there's a dearth of free information, but there must be people that you follow on Twitter that specialize in derivatives that you think are especially knowledgeable. Who are your top three?
Oh, I mean, honestly, the Twitter is amazing for me, but I use it almost exclusively for people that are giving news on specific companies. What's the good stuff? There's some guys. There's a guy called the Option Hawk or something like that, who he puts up stuff like most of the stuff on Twitter that's useful is just like people highlighting big trades that are going up. There's really not a ton of great stuff options wise on Twitter. There's a ton of great stuff, in my opinion, on fundamentals. So like in biotech, for example, there's countless really good, Adam Feuerstein, I can't pronounce his name, or you can see my Twitter list. I'm happy to share you a list of people that I follow, but there's a ton of great people covering stocks in different sectors. But option stuff, again, it's really bad on Twitter. It's really bad on the internet. All these guys, occasionally I pull up YouTube and I see these videos that pop up in my feed where people are selling a product or showing how to trade options. It is horrible. Like, it's not even close to like reading Phil Hellmuth's book on poker. Like, it's just exponentially worse than that. And so, it is really interesting. And I think it has to do with the fact that there's just it's not as accessible. Market making options is not as accessible as playing poker. And so it's back to where when Taylor first made card runners, I remember thinking, why would anyone do this? Like, why are we giving away all this information? Like, why do this? And it's just like that right now with professional trading. The traders that are making good money, they can't possibly charge enough on these trading websites to make it worth it. So there's just nothing out there.
Yeah, that makes sense. So going back to poker, your poker now is main event every year plus the occasional $1 million tournament, something like this.
Yeah, it's really like I play the circuit events near Oklahoma. There's a couple of those every year. I banked one last year that was really fluky and funny. I played that $1 million Euro thing. I'm on the look for those like amateur only tournaments. The most recent one at Triton, like where you had like half of it was pros, half of it was amateurs. Like, I'm not even like, it's not a good spot for me, obviously, unless I'm like.
Well, I don't know. Team Strasser and Chidwick might have sold for a nice premium. I think that team might have sold for a nice premium.
Like, I'm always on the lookout for those kind of things where you can those amateur only tournaments that I qualify for, but there haven't been. I don't think since the one in Monte Carlo that I busted, that there hasn't been a whole lot of that. But yeah, for poker, it's more, the thing I would say about poker is some of the guys that are crushing it today, I used to play with, and I didn't think they had any game. That's what's always funny about a lot of the stuff. Like, I'm not going to name names up here, but there are plenty of players today that I thought were just the opposite of creative, the opposite of just like maybe they had, they're winning players, but just nothing exciting about their game. There wasn't any pizzazz to it. And, when you look at the super crushers today, the thing that makes me happy is the Chidwicks and the D. Peters of the world. Like, those guys have games. They'll take it to the streets, I like that aspect of their game. But then there are a bunch of people that, memorize the answer key and don't apply it. I'm not saying memorizing the PO solver is a bad way of looking at poker. It's just not as fun as some of the poker to watch that old poker, in my opinion. And also, I don't think that I think there are a lot of pros that are a step down from the top pros that just play a really lame, boring flavor of poker. And so for me, poker, I watch videos. I watch more, like, the ratio of how much do I like I watch more run at once videos than I play poker, because my life makes poker playing very hard. I can't really play on the internet. That's not really possible these days, although you're good at that this year. Driving to the casino to play 5-5 no limit and getting in like 200 hands and driving home. That's depressing. There was like a Russell Westbrook PLO game in town that I couldn't get into. So that would have been dope. But for the most part, like playing poker doesn't really fit well with my life. So the way I get poker now is I watch videos, or like the recent stuff with the super user or the cheating guy. Like I love that kind of stuff. So that's my poker these days.
Yeah. Well, in terms of memorizing answer keys, I don't think anyone could argue with the fact that poker is in a long-term process of becoming trivialized. Like we don't know exactly the time frames, but because we have gotten to the point where we play a static game where the rules are basically the same and computing power has tackled it, it was inevitable that given the static nature of the game, it was going to yield to analytical methods and computing power. And that has in fact happened. So it is true that the computer, even though we know now that their solutions are better than our solutions, it can't explain why the solutions are the solutions. So there's going to be a long process of humans trying to interpret and learn about why the solutions are the solutions. But basically, the solutions are going to be out there increasingly. And the best humans are going to be ones that copy from computers. Copy is not exactly the right word, but learn from computers. And I think the result of that is a trivialization of poker over the long term, which is kind of sad. But for me, I enjoy, first of all, because I did have the economics background and was deep into game theory for a while. I enjoy watching that science be applied to poker. So I actually like studying the solutions. And then, although the environment at, say, an ARIA tournament is not quite as spicy and interesting as it was in 07, it's still fun, and there's still edge in it because you have 70% of the field that's somewhat close to each other, and then 30% of the field that's just doing random things and not interested in learning, and there's a big edge that the 70% has over the 30%. So I don't know. I think it's still an interesting world, but it's less interesting than it used to be, and it's in the process of becoming less interesting still.
I agree. I mean, poker's always been most fun when you can try to pick up on what your opponent's doing wrong and make adjustments to your game. Like that's always been the most fun, and that's why like playing like the main event is always really fun for me because actually playing with the crushers is fun too. I love I don't get much experience to play with people like that, so it's always so fun playing with people like that. But just going through each opponent and adjusting and making your own small adjustments to your strategy or large ones based on the opponent has always been like what I really enjoyed about poker. And you still get to do that today, but when 70% of the field you're going to be playing the same strategy against, it's just a little bit less opportunities to make fun adjustments. And yeah, like I still think there's a big difference though between the really good pros and the second tier ones today, even though they're all studying the same things. I just think that those really good pros are not only good at knowing the solutions or knowing close enough what the solutions are, but they have a good feel for when to take those like sort of small, like it's not very human to like 8% of the time here I'm going to do some crazy bluff. Like, and I just feel like those good players, they have a really good feel for when are good feel for when they can kind of get one of those plays in, and they try those things more than some other players who just never take 8% spots just because it's hard for a human to do things like that. So, but yeah, I guess like one of the things I loved about poker was making adjustments, and you just have less opportunities to do that today when you're going to be playing your best strategy against 70% of the field.
Yeah, I think a lot of the lesser pros now are lesser pros because of a misapplication of theory, a misapplication of the solutions that computers are coming up with, because many of these solutions are very sensitive, and if you don't understand them well enough to know where they're sensitive and where they're likely to break down, you can be guilty of really misapplying them. So I think over the next couple years, that's going to be the big difference among pros, those that understand where the solutions can be trusted and understand where the solutions break down, and you have to tread a little bit more carefully. So I think misapplication can cause a lot of problems and will cause a lot of problems going forward. If we go back to 2008, 2009, who were the players that as your poker career was ending, you really wouldn't want to play 100 hours of live poker with? Who were the guys that you thought were better in that live? I know you didn't play as much live then, but who would be the guys that you didn't want to play with?
There's one guy who just crushed me online, live. There was two guys that crushed me my whole career, live and online. Mr. Smokey, shout out to Steve somewhere. He's one of those guys where he had a lot of success back in the day online, terrific player. Obviously, I can't speak for anything, but I don't think he's one of the super crushers today. But he was a killer back then, and live he just always killed me as well. I could never explain it. And the other kid that mostly online just always beat me. Well, Nick Schulman. Nick Schulman, I don't think enough is said about his game over the years. Like, he was just, I played with him in live games in New York, like private games in New York. I played with him online. That was a guy you never wanted to see. And then the other guy, man, this is bad. Ozzy 87. Remember that guy way back
Sure.
in the Yeah, that guy just crushed me over and over. Crush. So I would say like two of the three people that just crushed me back in the day, they don't even play. Ozzy, I think, went to school and stuff. He's not like a poker guy anymore. And I'm not sure if Steve plays anymore. I don't really see his name anymore. But back in the day, those were the crushers. And it shows you kind of how for every Nick Schulman or Eric Seidel or whatever, there's so many more that were crushing.
There's a lot of churn. Yeah, there's
so much churn. Yeah.
Nick he's a long-term face of the game for sure.
Oh yeah. I mean, he just, yeah. I mean, you really can't, there aren't many people with the live experience that he has. I mean, how many people play more live poker than Nick Schulman in the last 20 years? Like maybe there's 5 people. I would doubt it though. So you combine that live experience with just like a really awesome mind and also like people skills. Like, part of being a good pro is getting in the right games. You know, Tony Esfandiari was not one of those people I mentioned back in the day. Like, you were never scared to play Antonio back in the day, at least from my perspective. But you know, he's made a great living on people skills. And Nick, I throw Nick in there as well. Like, he's just a very likable guy as well, can get in all the right games, and just an awesome player.
So I'm only going to keep you for 5 more minutes because
Okay.
I know that you had a full work day before this. But one major difference for both online poker and live poker relative to, say, 2006 was the
lack of lifestyle discipline that was evident then among the top players and the extreme lifestyle discipline that's evident now. And I know that now for you, a poker tournament is half vacation and half, well, it's probably 90% vacation. I mean, at the main event this year, you were more about going to nice dinners and stuff like that rather than focusing on the tournament, going to the club, the pool, whatever. But that is probably the biggest thing that's changed in my poker career. Was back in 06, 07, the lifestyle discipline was non-existent, terrible. And now it's kind of a joke how extreme it is.
Yeah, no, I agree completely. I mean, yeah, even like now, like when I used to go to Vegas when I was like, 2012 or 13, I remember I met Jason Kuhn for the first time. Like, Dave Benefield's one of my good friends. I met Jason through him, and I couldn't believe they were living in this house, and I just couldn't believe like what these guys were doing. They were just working out, eating, and it wasn't just like working out and eating. It was also just like a lifestyle and a way of talking about things, and yeah, it's completely insane. I mean, back in the day, like there was just a ton of like really fat, out of shape people that were competing at poker at the highest level. And how many today do you see like that? There's almost none of that. So yeah, I agree with you. It's a little bit of an extreme. It's a little extreme. It's a little annoying too. Like, you don't want to, I don't know. For me, it's like, I don't want to hear about your diet or your workout.
But it's part of the move towards a hyper competitive space.
I agree. And you obviously in Wall Street, you see that all the time. Like, you see these guys that are running funds that are super competitive. And the thing that bothers me is when people are really, really competitive at stuff that they're not that good at. Like, you see like these like pickup basketball games with poker players, like, be way too competitive. It's like, nobody here is good enough at basketball to be I don't know. I try not to get like emotional about things I'm not very good at. Like, how can I expect to be good at golf when I play like 3 rounds a year? But you see that with poker players and Wall Street guys just taking out their aggression on things that they're not as good at. And but yeah, I don't know. I think in general, it's the same thing in Wall Street. If I look back when I started my career, there were a lot of same thing as poker. Like there's way more healthy eating at the desk. I had a boss that showed up in 2010 at Morgan Stanley, and I came in one time with a bagel, and he basically yelled at me. He was like, "What are you doing? Like, you can't eat a bagel." And I think over time, like, it's not just poker. I think a lot of different businesses or areas are turning into that. And
well, we're all becoming more like computers.
I know, it's kind of sad, isn't it? I still live to eat, not eat to live. So I think food is one of the great things. I think poker players love food too, but yeah, I agree with you. It's borderline annoying or borderline insane, some of the stuff that's going on with healthy eating and healthy dieting.
I'm going to ask you one last question, and then we'll cut to that. Practical risk management. Obviously, now you have to make very important decisions where day to day, you could theoretically like wreck your career in one day or 1 month, right? Like with a bad drawdown, bad series of trades, just in the way that a poker player can wreck their career in a bad week or whatever. And as poker has evolved again, there has been more discipline in terms of risk control. Options, it seems like an exceptionally volatile and illiquid space where risk control is really important. How have you learned practically to think about risk control over time, and what are sort of the frameworks that you think about? Do you have some sophisticated like Kelly criterion type methods, or is it more just heuristics like don't risk more than a certain percentage in a day or a week or whatever? How do you think about risk control?
There are 2 things that I think are really important. The first actually started with the way I approach poker. So, when I used to spend my summers in Las Vegas in 2006 and 7, I would get off the plane when I landed in McCarran, and I knew how many buy-ins roughly how much in buy-ins I was going to play that summer for the tournaments. I would mentally lose that money on the plane. Like on the way over to Vegas, I would have already lost the money in my head. And then every day I would go play a tournament, and I would say, okay, let's just make the best decision. I'm not worrying about anything else. Like if I lose this money, it's totally reasonable amount of money for me to lose. My life's not going to change. I'm totally comfortable with my loss. Now let me just play my best and not worry about anything else. So that's how I approach poker. And it's the same thing with trading. When you buy an option, for example, you know what you're going to spend. You know, when you buy an option and you lose, you know what you lost. It's like a tournament buy. You spend X, okay, it goes wrong, you lose X. And I always like doing risk management on the way in. Like before I do a trade, I'm doing the risk management. There's a lot of schools of thought on risk management. I hate having to react and trade around things that are happening and make, oh my gosh, I had this really big short vol position on it. Something crazy is happening. I need to react. I need to do something. Rather than doing that, I like sizing it on the way in as if it's going to go really, really badly and be comfortable with that outcome.
Well, that's practical because the pricing is getting more attractive as it's moving against you and you're losing money, which makes it hard to get out.
That's true. And also, I think especially with options, you just want to be, when you're selling them, you want to be very small. Bad risk management in what I do, you would just, at some point, you would just run bad enough where you're out of business. And so, we've been at it for 8 years now. I think you have to be very small when you sell options. Just like, there's not a really good poker analogy for selling options, but the same thing, I always thought Kelly, I'm not sure your opinion, you're more educated on this than I did. I always thought Kelly was very aggressive. Whenever I took Kelly and I applied it to my poker or my trading or whatever, I always thought Kelly was very, very, very aggressive. And so even half Kelly, very, very aggressive. And I know there are different ways of approaching risk management, but I always felt comfortable with taking a very, very crude approach. On the way in, do the risk management and don't rely on getting in a mess and trying to trade your way out of it or whatever.
I've never viewed Kelly as a practical risk management criteria.
Yeah.
I mean, it's a useful way of thinking, and it's useful to maybe develop risk management rules for yourself, but I've never viewed it as having any real practical application.
Okay. That's good to hear.
Well, man, this was a true pleasure. I hope that our mutual Twitter audience enjoys this this interaction. These old school poker guys going at it.
Well, at least one of us is washed up, one of us isn't, so that's good.
All right, my man. Thank you so
All right,
much.
Brandon. Thanks for your time, man. Talk to you later.
See you soon.